Indeed, Nimesh, it could be a binary event, and we have seen how some of these events play out. So that's the big cue. We'll keep an eye on that. Thanks so much for joining in. But as promised, let's welcome Raunak Onkar, co-fund manager at PPFAS Mutual Fund. Well, Raunak, thanks so much for coming down today. And, it's going to be a big event, so I hope you're going to be staying a little bit longer after this as well. Let's talk markets first up. What are the cash levels you're sitting on as of now? We've had a big rally. Are you all fully deployed, or are you all still sitting on some cash? And particularly with regard to your global exposure, I was just looking at a couple of data points. I think you'll have lightened your positioning on Suzuki and added some positions on Alphabet as well as Amazon. Tell us more.
Sure. So Nigel, thanks for having me here. It's good to be here in a live environment. Otherwise, we talk on the screen every time.
Yeah, indeed.
So yeah, with the cash positions, the FlexiCap fund is about 17% of cash right now. But we have been on cash for a while now because the valuations in domestic market have not eased, as we know. And since we are not allowed to deploy additional funds in international, although we are allowed to reshuffle between the existing positions, we have decided to trim the position of Suzuki Motor Corp, the parent company, and we bought the domestic subsidiary Maruti Suzuki.
Oh, okay. All right. Raunak, before we go on, I was just looking at another data point. I believe it's 10 years since your FlexiCap fund was first launched. So congratulations on that front, but a bigger congratulations because you'll have given good CAGR returns over the last few years. And just to tell our viewers out there, this FlexiCap fund started with an AUM of around 150 crores. I believe it's closer to around 30,000 crores. So good on that. Congratulations.
Thank you.
But we were just talking about the pharma stocks. And in your rejig from your domestic, from the India-facing stocks, Sun Pharma is a stock, I think, that you all have exited most of your holding.
Yes.
Could you tell us if you all have taken a position in another pharma stock, or you'll have just cleaned out from the pharma space?
So people who track PPFAS schemes for a while, they know that the pharma positions in our portfolio have been a smaller position, usually around 1% of each of the companies. And the reason is we are having a difficult time to identify which one company might do really well. Because of the FDA issues, the market shrinking in many categories, the verticals which they operate in may not grow as well, or even at the same time pricing power may not be there in some of the older categories. So many of these companies do face these competitive challenges. So we have always found it difficult to pinpoint on one company. So we built a basket of pharma companies who were troubled at that time while we invested. So Sun Pharma particularly at that time when we invested, it had the FDA issues plaguing it and the stock had bombed at a point, and we built a position over a period of time. We held on to many of these stocks because we tracked the numbers, we tracked the results over a few years, and we saw that it's very, very competitive market and it's not growing. At a scale, you can only grow at a certain level. So Sun Pharma, I think there are better opportunities available. We may go into other pharma names, but so far we've just sold one, and it's like a basket. So the basket keeps getting reshuffled. So in the past we have reshuffled from Lupin to Cipla. So we might look at other pharma names in the future.
Raunak, I keep a close eye on, what you're moving around. I try at least. But, a couple of stocks that I remember that you'll got in when most of the market was shunning them, which on a valuation parameter were looking good. ITC, if I'm not mistaken, and Coal India.
Yes.
I think you'll have lightened the position on Coal India. What about ITC? If you could tell us what's the reasoning out there? Are you looking to, completely exit Coal India? It's made the money, it's had its run, and now it could run into some headwinds?
So there are two different kinds of businesses, ITC versus Coal India. Coal India is more of a commodity play where it's a mining giant, whereas ITC is a earnings compounding kind of a business. So it has several businesses which generate profit and they continue to grow. So with ITC, we may have a longer term point of view as long as the valuations remain comfortable. With Coal India, it remains to be seen when the valuations will be difficult to hold on for. But Coal India has been a good entry point for us. At least after the COVID, we realized that the power demand in the country has been growing, and thermal power has been a larger component of that power demand. So I think Coal India has a bit of a future, assuming they continue to mine and grow their production volumes as well.
All right, very different businesses, but Raunak, the reason I asked you about both of them was they were those anti-ESG plays, right, at one point of time. Suddenly that discount completely went away and both these two stocks did quite well. But I'll tell you what, my co-anchors, don't want to miss out, so they want to ask you a couple of questions. Guys.
All right, Nigel, thanks for that. Raunak, I just a bit of a here and now kind of a question. I don't know if you saw the April equity inflows into equity funds, the numbers which came through. It's a very sharp fall. Our number is about 5,500 crores. Previous month, it was some 20,000 crores. This is April versus March. Any thoughts? What explains it? One logic is that people allocated a lot of, brought forward a lot of investments and put money into debt, real estate to lock in before tax changes kicked in starting April. So then April became a little light. Is that the most likely explanation, or is it something else?
That seems like the likeliest explanation right now. But if you see, Prashant, the stocks have also moved quite quickly in the period of past 2.5-3 years. So I think most asset allocations would have been skewed very higher towards equity. And it's natural that people would want to rebalance their portfolios to build a debt portion as well over a period of time.
Okay, got that. Raunak, hi, and good to see you on the red carpet along with Nigel. And hopefully, yeah, we'll see more of you through the evening as well. Let me ask you this. I know that a lot of your holdings are more from, whether it's IT or a lot of the financials. But I think the big debate today has been on capital goods, considering what L&T has delivered or rather not delivered. Just your thoughts on this entire side of the market, whether you are looking to deploy more money here. And if so, what kind of companies would you go for? Because what L&T is kind of revealing is that profitability and margins are not easy to come by, even in such an upcycle like the one that we're in.
Sure, Surbhi. So I think capital goods is a very tough sector to be in. Unless you have scale or you have some capability which other companies don't have, it's very hard to demand any pricing power. At the same time, you have government contracts and a mix of private capex not picking up so far. So I think all these factors playing in, it's a very hard business to be in. We do track capital goods because we generally track the entire market, and our investment universe does have a few capital goods companies. But we have so far not ventured into buying them because, number one, valuations have picked up much earlier than the results have actually shown up. So I think it remains to be seen in the future if it's a great sector to track. But I think it's a mix of good companies and a very competitive environment to begin with.
All right, Raunak, the bigger debate I think is on IT. Should you be getting in or should you be getting out? One part of the street is saying it's already corrected a goodish bit, 30, 40, 20, 30, 40% from the top. The other part is saying that it should not have gone up so high. But I was looking at the way you all have rejigged, and I think this most sizable addition in the last couple of months on the position on the had was on Infosys.
Yeah.
So you all are buying into this bad news, so-called bad news or nervous period for the stock. Tell us more about your view on the tech space as well as Infosys.
So it remains to be seen if it's a good call. We'll wait for the long term to play, the stock to play out. Yeah. But in IT's field, if you see, these companies have been through various cycles so far. So what people talk about supply side cycles where employees are hard to find, and on some time it is the demand side cycle when the economy or the customers are facing troubles and they are unable to spend on the IT spending. So these two things have played out several times in the past, and most of the IT companies have scaled and become large giants today on the back of several cycles of technology change as well. So I think these companies have the capability of running these business models. They have the reach, they have the marketing chops, the sales chops to scale these companies. At the same time, the delivery engine is perfected. So India still remains to be the low-cost employer for IT services. And as long as the arbitrage is strong, it's sizable, India will have the advantage of scaling that particular sector.
Well, and time will tell whether or not this call works. But for the time being, you'll have definitely gone ahead and added a big chunk, if I compare the last couple of months. Raunak, final question before we let you go. You were telling us that you've exited the international position on Suzuki. I think you've got into Maruti. Yeah. What's your view on the auto space? I think from the two-wheelers, Hero MotoCorp as well as something that you all got into. Tell us more.
So we have Hero MotoCorp and Bajaj Holdings, Bajaj Holdings. But in the auto space, we have been a little early in the two-wheeler space and not played out that well for us because two-wheeler space has faced a lot of challenges in terms of volume growth. Whereas on the four-wheeler side, there's actually a lot of growth. And despite Maruti losing some market share to the other competitors, it's still a decent player with the largest market share as a single company. And with the portfolio, which is now about to match some of the other players as well. So again, remains to be seen how they perform in the volume game going ahead. But I think four-wheeler space is a little better placed right now. And we have trimmed down even Hero MotoCorp because of that.
All right. It's always a pleasure talking to you, Raunak. Thanks so much for coming down and hoping forward, to see you later this evening. As Surbhi said, we're looking forward to catching up with you. Well, guys, I'll toss it back to you all in the studio. But maybe after a commercial break, I'll get you all a sneak peek into what's going on inside the big event.